One of the most common questions asked by first-time home buyers is, how much cash do I need to buy a home? And this is practically the hardest question to answer because there is so many variables in every home transaction. However, in order to avoid just giving you the typical "it depends" answer, I wanted to break down the expenses and give you an inside look to hopefully give you an idea of how much money you need in your situation to buy a home. In this video, we're going to be going over the down payment, the closing cost, where to get the down payment, and ways to lower your out-of-pocket expense. So there's a couple of different loan programs out there, but most first-time home buyers either put a 3% or 5% down. So for example, a home that costs $250,000, a 3% down payment of $250 is $7,500. A 5% down payment of $250,000 is $12,500. However, anything that has less than a 20% down payment will require PMI, which is private mortgage insurance. And this is an additional cost on your mortgage that you're going to get billed every single month. And you can expect, depending on your credit and your loan, anywhere from $30 to $70 per $100,000 borrowed. So another expense to consider if you're not putting 20%. However, the down payment for first-time home buyers is, again, right around 3 to 5%. So the two most common loans out there is a conventional loan and an FHA loan. A conventional loan is a government guaranteed loan that usually requires a minimum down payment of 3%. And typically, borrowers need a credit score of 620 or above for a conventional loan. An FHA loan requires a minimum down payment of 3.5%, and that will vary a little bit with your credit score, but it is 580 for minimum credit score. FHA requires additional paperwork too, and the home needs to be in a decent condition in order to purchase. So although these are regulations that are set at the federal level, there's individual lenders that may have tighter restrictions than what I just stated. So if you want to look at all the options, you would want to look at multiple lenders and see what they have to offer. And keep in mind, if you have poor credit, you're probably going to have higher rates because you're just a higher risk. Now, there is two 0% down payment options, and those are VA loans and USDA loans. Both the VA loan and the USDA loan require 0% down, and they're guaranteed by the government also. The VA loan offers no down payment and no minimum credit score, and it is offered to all veterans, military members, and spouses of veterans. Along with 100% financing, the VA loan also offers pretty decent low rates, and they don't charge any PMI or private mortgage insurance. The USDA loan is a second type of 0% down payment program, and the USDA loan program is offered in more of the rural parts of the country. However, you'd be surprised what areas you can get a USDA loan, so I would probably look it up on the USDA website to see if your area is covered by a USDA loan. Also, there are down payment assistance programs available, so check with your lender and your realtor to see if you're able to take advantage of any of those programs. The two generally prohibited sources of down payments are cash and unsecured loans. So if you save your down payment under a mattress or in an actual piggy bank, you might have some trouble providing a paper trail for those funds. And all unverified funds may be considered illegitimate funds if they don't pass through a financial institution. So it's best to have it in a bank account. Unsecured loans are also a terrible source of your down payment. The loan would add to your monthly obligations, and then it would kind of indicate that you're unable to accumulate the funds anyways. So don't try anything funny with your lender because they're going to go through your finances in detail, and you're going to get caught. So it's better not to do any of that stuff. If you need help, talk to your lender, talk to your realtor, see what the best options are for you. So here are the approved sources of the down payment funds. Personal accounts, so this includes savings and checkings, and this includes you and your spouse, so you can add both of your checkings, both of your savings, and you can figure out a total from there. This is where most of the people get their down payment from, and it is actually the best place to get your down payment from because there's a lot of paper trail on that. You're probably depositing checks. every week or every other week or a couple times a month, and it makes it super easy for the underwriter. So another thing that you can also do is get a gift from a family member, and this could be your mom, your dad, your sister, an in-law. Even grandparents can contribute to the down payment requirements. However, the lenders will require you not to have to pay the money back, so it has to be a complete gift. You can't pay it back. And additionally, the lender might also require you to give a gift letter. The IRS allows people to give up to $15,000 without paying taxes on it, so it's something to take advantage of. Another option would be a retirement account. So if you're a first-time home buyer, you might be able to withdraw from a traditional IRA or a Roth IRA, or even a 401k without the 10% early withdrawal penalty. So talk to your lender about your options and fees about your specific situation. All right, so the second largest expense in the home buying process is the closing costs. And there's closing costs for the seller and there's closing costs for the buyer. And it's the second largest expense other than the down payment. This is by far the most overlooked and hardest to understand. Closing costs in Illinois vary, but the average cost is anywhere from 2 to 3% of the home sale price. Closing costs vary depending on the lender, the loan, and the city and town that the home is in. Some of the closing costs include title searches, title insurance, home inspections, appraisals, surveys, credit reports, attorney fees, transfer tax, and a whole bunch of other stuff. If you want to get a detailed estimate of the closing cost for a home in your desired neighborhood, consult with your realtor or lender, and they will be able to help you out, better pinpoint exactly how much it's going to take to close on that home. For the purpose of this blog, we'll be averaging out the closings at 2.5%, so that's $6,250, or 3% if you're trying to be safe. Now, another thing that the bank wants you to have is a little bit of cash reserves if needed. Cash reserves, like many of the other topics in this video, vary. However, the most typical cash reserve requirement is 2 months. And this is 2 months reserves to cover 2 months of mortgage payments. So if you have a $2,000 mortgage payment or projected mortgage payment, you want about $4,000 in savings. So take, for example, if your mortgage included principal and interest, insurance, and came to $2,000. Most lenders will want to see about $4,000 in reserves besides the money for down payment and closing costs. Keep in mind, cash reserves could mean actual liquid funds, any savings or checking accounts, or it could also include stocks, bonds, mutual funds, certificate of deposits, or pretty much anything you can quickly turn into cash. The VA and the USDA loan do not require cash reserves. However, again, I'd probably have about 2 months reserve minimum because you don't want the American dream to become a nightmare. Now, what if you don't have enough cash for reserve? So if you don't think you have enough liquid savings to meet the reserve requirements, really don't panic. This is just another problem that needs to get solved. You either need to save a little bit more, maybe talk to the lender, talk to the bank, and the real estate agent regarding your specific situation. But I'm going to give you 3 typical ways of how some home buyers reduce their out-of-pocket expense. The first and the most common way that people lower their out-of-pocket expense is to negotiate with the seller to help them with the closing costs. This is the most commonly used method by first-time home buyers. However, this strategy isn't always successful in all situations. In an extremely hot seller's market like we're experiencing today, this strategy is really hard to get agreed upon, and it's as often not a favorable term. The second way that you can lower your out-of-pocket expense is to ask for gift money. There's really no shame in asking for a gift from a family member that is willing to help you. A family could help you get the keys to home ownership, and this can really start you building equity. The third is to look for a down payment assistance or closing cost assistance programs. Every state has programs intended to help lower income and first-time home buyers buy their first home. So in Illinois, you can find the down payment assistance programs at www.ihda.org. I hope this video gave you an idea of how much money you need to buy a home. Although we went through the minimum requirement to close, I recommend having a little bit in savings. The purchase of a home should not be something you come up with overnight. It should be well thought out and prepared for. That is why every home purchase should first start with a proper budget and savings plan. Thanks for watching.